Hello everyone, I'm Cory Mitchell with TradeThatSwing.com, and this is your swing trading stock market outlook for the week of August 4th. Each week I just go through the same process, helping me see how the markets are doing, and this week we do have a change. We actually started to see it late in the week, and when conditions change, basically I trade differently, and I don't just keep hammering long once conditions turn unfavorable. And that's what we're seeing this week. So we're going to go over what's changed, what would need to change back to make it favorable for taking long trades. So long story short, market conditions have turned less favorable for stocks. Bitcoin retesting its old range. That's a key area. We'll talk about that. Gold is ranging. The miners are forming a rounded bottom, and yeah, a little bit choppy. They'd have to start moving up pretty quick. So that could be maybe a little bit of a bright spot if we start to see some upside movement in those. But other than that, if the market conditions continue to deteriorate, that may not come to fruition, but we'll see. I did just update the best swing trading stocks list if you're looking for some trades. If you're wondering where this article is, because I update it each week, if you go to stocks and just click on stock market analysis and trades, it'll be right there at the top because it gets updated each week. The current swing trading watch list, that specific patterns, I may update that this week, but since conditions aren't really favorable, then until they turn favorable, I'm not super interested in going long. So I may do a quick run through just to see if there is anything really good out there, because we are just in a minor pullback at the moment, very minor. So that could turn around pretty quick. So I may update that early in the week, so you can check that one. Let's start going through the indices. As you can see, still overall uptrend. We're just starting a little pullback here. And in the NYSE and the Russell, we've taken out prior swing lows. We kind of had a decent sized pullback there and then moved to new highs. We've dropped below it. So a little bit of, drawing the uptrend into question. These other ones are all just coming. This is the Canadian index. All just kind of coming back to those prior lows, or where we kind of leveled off for a while, moved up. And so still overall uptrends, and yeah, pretty minor pullbacks at the moment, but they can always turn into something more, and I prefer to just wait till conditions turn more favorable. And through most of these little pullbacks that have occurred prior, the market health indicators, which we're going to talk about, stayed favorable. So the fact that they're not at the moment, yeah, I'm okay to sit out. Bitcoin, important area here. So this is kind of something I've been talking about for a while after the breakout, is we want to see this hold above the old area. So it was ranging in here. We got a little false breakout, and I was kind of looking for a move up and out of this area. It didn't really come, and now we've fallen back to this old area. So this is the area I kind of want to see. Like, does this hold? Because uptrend should, if we form a range and it breaks out, we want to be stepping higher. We don't want to be like falling way back into this old range. So I want to see this hold in this area and then start to move up. And if that happens, I'll buy for, expecting another up move. And if it breaks back, it keeps dropping back into here, no interest in holding or adding to a position. So this is really kind of the area I want to see. So this is, I'm glad it pulled back here. Now we get to see how it acts. If it drops, if it's weak, nope. If it shows some strength down here, then I'll hold it. And then, ultimately it would still have to move up and out of this area. If it starts grinding around again, then we assess it at that point. But yeah, interesting point, or important point for Bitcoin right there. Gold, this is the gold ETF. You can see pretty much moving sideways. We have a little bit of a rounded bottom pattern here in the mining stocks. You can see it was struggling to go lower. We had this little pop up, and we're still holding above that prior swing low. So if it drops much lower, it nullifies the pattern. But if we start moving up, then maybe miners look okay, even if the market's a little weak. We saw gold was strong while the market had been weak before. And so sometimes there's a little bright spot in the market where we could potentially deploy some capital. Based on how choppy this is, we'll see. Also, we're not quite in the strong up move we were before. As you can see, we're making really solid higher highs. This one we had a bigger pullback, and we've kind of stalled out right near that prior high. So we're not getting the same high momentum situation where we're just surging way above prior highs. Like if this occurred up here, that'd be better to me than it occurring right at the prior high. That said though, if we start moving up, could see some of the miners continue to move up as well, obviously. Look at the market health indicators. So this is looking at what's going on under the hood of the market. I can move my so you can see a bit better what these are. So we have volume here. That's not important to me at the moment. I keep volume on there because it's important after a decline. I want to see what the volume is as the price starts moving up. And that's important for follow-through days, but just on a random day, volume is not important to me on the index. This is the rate of change, simply how much the price is moving as a percent per day. And you can see uptrends characterized by low volatility, low movement. Downtrends, turning points characterized by high volatility. We had a little bit of a high volatility day. My cutoff is 2%. We did not hit that. So we're not seeing extreme selling coming in quite yet, but we did see a bit of an uptick. But as you can see, that 2% I find pretty important because this one, we saw a little bit of an uptick there, but it amounted to nothing. Whereas the ones that really sell off, we tend to get choppy trading after that for a little while, or a continued decline. So we haven't hit that yet. So it's still a smiley face. We're basically still in conditions that are correlated with uptrending stocks. Advanced decline line, it has been flat and starting to turn down. It got a little flat even before the S&P did. So I put this as a neutral. It's kind of just moving with the S&P. It hasn't really given us any major weakness signals or anything, but it's also not indicating strength. So it was smiley before because it had been in a nice uptrend. Neutral. Upside volume versus total volume. It's neutral. We haven't had a signal in a very long time. Now, since this decline started, I'm either looking for if we got a reading way down here, which is 10%. This is upside volume versus total volume. So 10% upside would mean that since there's only 10% upside volume, that means we had a 90% downside volume day. That means 90% of the volume that occurred that day occurred in stocks moving to the downside. That is showing widespread deep selling, and that would be another signal to really watch out and avoid. A 90% upside day wouldn't really matter to me at this point. That would be if it hit this line. But if we get a little bit further correction and then we see a 90% upside day, that can often signify a bottom. But if a 90% upside day just occurs in an uptrend, they don't occur that often. As you can see, we haven't had anything touch this upper line or this lower line in a very long time. It just basically confirms. So we'd really want to be looking for either a big sell-off day, which helps confirm, hey, we might be in for a bigger decline, or we get the 90% upside day after the price has declined, and that can help confirm a bottom. This is percentage of stocks above their 50-day moving average, a very crude measure of, in my view, how easy it is to make money. If most stocks are moving up and generally pushing higher, it's a lot easier to make money on the long side. And it was through most of this period, and most stocks were moving up. Not just the this is why I look at these indicators, because it shows what most stocks are doing, not just necessarily, yes, the S&P was moving up, but most stocks were as well. Sometimes you get a divergence where one of these indices will be moving up just because a couple really big stocks are doing well within the index, but most other stocks are not doing well. So during this time, most things were doing pretty well. They were moving up, they were holding above their 50-day moving average in uptrends. Fairly easy time to make money. Now we're dipping below that. So most stocks are now either below or not holding above their 50-day moving averages. And the S&P also starting to turn. So frowny face, basically we like to see this above the 50 for easy money times. Ultimate indicator, how many quality setups are you seeing? How are they working? You can look at your own results and watch list to determine, is this an easy environment or hard? And yeah, if things you're trading are still moving really well, hey, great. But if they're not, that's a good indication that maybe to back off. So what am I doing right now? Backing off of long trades. As conditions improve, I'll get back involved, but not before. Gold miners and Bitcoins may be a bright spot. We should find out shortly. If the miners are forming around the bottom, they got to start moving up pretty soon. Same with Bitcoin. It's testing that old range. We want to see it move up, off, and out of that area. If it doesn't, if it does start bouncing, hey, great. We have a shot at potentially it moving up for another up wave. Day trading, always an option, especially as prices if prices were to continue declining, that generally escalates volatility. You get a lot more opportunities day trading, which works out pretty well because most swing traders tend to focus a little more on the long side. So when things get a little ugly, you get to back off from swing trading. Day trading gives you the option to capitalize on that volatility, the moves that are happening during the day. So if you're looking to incorporate another style of trading, day trading and swing trading actually do work pretty well together. I also do them at different times of day. I day trade in the morning, and I look for swing trades at night, and I put out orders at night. I'm not really watching the market for swing trades during the day. So they're compartmentalized, separate, and even at different times of day. So anyway, that's just something if you're interested in adding in some day trading as well. It's action every day. Swing trading has these periods of action and inaction where I'm potentially going into a phase of less action if the market continues to decline. That's your swing trading stock market outlook for August 4th. Have a great trading week out there.